So it's possible we could get one more run to the upside. The 2-week off number was 1680, and we got down to 1690. So we'll see what happens with gold. Did some profit taking from the shorts last week at the 1725 and 1740 level. So pretty flat on the metals. Here's another turnaround Tuesday potential candidate in Euro GBP. We've taken out some lows here, flushed. The RSI doesn't look so good, but perhaps we get some type of turnaround here in Euro Pound. We really need to get back above 87.40, which is a big pivot. And I wanted to talk about something that I think I could coach you guys with my experience here, and it has to do with rates. Okay, so just because a trade doesn't work for you right away, and there might even be a little jiggle, doesn't mean you're wrong. Okay, so patience when you're waiting to get into a trade for the setup to be there, and then patience while you're in it. Of course, having defined risk and, over the highs, I would have been wrong, but I'm looking at this and, when it takes a while, what happens is self-doubt, especially when there are people that you respect looking for the opposite. You know, even the team looking for one more wave down in rates. So we'll see. We're on the verge of a 2-week reversal in the 10-year note. That's going to take place at 65, and I still think one of the most contrarian trades on the board, besides short metals, is bearish treasuries and looking for higher yields. So yesterday was a nice little beginning with a heartbeat. We'll see if we get some type of follow through. Let me look for where you guys are at. So anyway, I'm looking for, again, the chat. Here's the chat. June Cleaver, Ward, you okay? All right, and let's look at the questions. Any questions on anything I've covered so far before I turn it over to Blake? So weaker dollar, looking for higher yields, and possible turn in Euro Pound, and may as well quickly hit on S&Ps. So, gosh, I remember down here, talking about a move to, 3,000 seemed pretty aggressive. And I still, even though it's turnaround Tuesday, not sure if this is it. In the S&Ps, maybe there's some type of scalping possibility. We are still getting on short-term indicators here. We are getting a confirmed high up here. Now we're starting to diverge. Let's look at the 1 hour. Yeah. It could begin to nibble and scale as we head up towards the 61.8 level. We almost got there. The way I have the fibs, I have it at 29.29. So I think we're getting closer. Here we are near the end of April for a sell in May and go away, but I don't see anything here yet that I want to step in front of. I just want to remind everyone that the next 2 days, you're going to check in to you're going to receive an email, not for FACE, but for the summit, and FACE will open up the summit both days. Look forward to you guys bringing some great questions to our speakers because you're going to have a chance to ask them. And with that being said, I'm turning it over to my colleague Blake and see what he thinks about what's going on here on a turnaround Tuesday. Pretty negative action in the dollar, huh, buddy?
There it is. And good morning, Dale. How are you doing?
Morning, buddy.
So, the dollar, it really slipped overnight. And but we're testing some pretty key areas right now. So if you guys, I guess, first of all, if you read the blog, I put out a chart of the day pretty much every day. There's some days that I can't find something, or B, I got tied up doing something, so I didn't put up a chart. But the dollar Canadian, when it was above 140, looked like it was going to break down. Crude was selling off, dollar Canadian wasn't going up. The Canadian currency wasn't selling off, and I'm like, man, that's a recipe for a reversal here. To see the dollar Canadian slip through 140, and it did. So hopefully some of you guys took advantage of that overnight.
Nice call,
As,
bro.
Thanks. But I was actually short the Aussie New Zealand, had that thing get jammed up my rear end. So it's like, you make money on one, you lose money on the other. It's like, so frustrating sometimes,
Like golf.
Uh,
Nice tee shot and 3-putt.
yeah, it's like sometimes it feels like 3 steps forward, 2 steps back, but it is what it is. It's just part of trading, right?
Yep.
So you'll notice that as Dale pointed out, the dollar is weaker, and we have like the euro dollar. It's testing this downtrend line, and also the 618 retracement. Nice little inverted head and shoulder pattern. And DK in our chat room said it perfectly. When the inverted head and shoulder patterns, or head and shoulder patterns, look so easy, they probably are not going to work out. So, I'm a little skeptical of continued euro strength here, but I do think that we're, pretty key resistance. I think if we squeeze past 109, we might challenge 109.50, maybe back up here towards, this resistance, this area. Will we complete the inverted head and shoulder pattern? Yeah, maybe not. I mean, I'm in the same camp. If it looks too obvious, it probably isn't going to work out, but that doesn't mean that you can't get some sort of squeeze here. You know what I mean? I just, the point is, I don't know of how much I would expect from here to, to wherever. Maybe get us a little bit of a get us a little bit of a move up. But I think everybody's trying to lean on the euro higher. One of the issues that, well, I don't want to get too ahead of myself here, but the dollar should be weaker as stocks are stronger, and as you guys can see, stocks are continuing to break out, and this is what I talked about yesterday. Like, we're above resistance, market's not pulling back. Chances are we're heading higher. The 618's coming into play, and it is. I mean, that's what's happening. I mean, everybody's chasing the market higher, and it's kind of like that like acceptance phase of the market. Yes, we have very high unemployment. Yes, we have the lowest PMIs on record almost globally. And yes, the stock market is going up because of the Fed. Well, screw it. If I can't beat them, I might as well join them type of attitude. Whether that's the right attitude or the wrong attitude, whether it ends up playing out, you might look back here at 2,900 in the S&P 3 months from now and say, oh my God, I could have sold all the S&P I wanted at 2,900. Or, we could head to 3,000 first. The fact of the matter is the momentum is on the side of the market currently, and we continue to rip higher. And so standing in front of this right now seems futile. There is going to be a point where the market comes to the realization that, oh my God, we've been shut down. The world's been shut down for a couple of months. That is going to have a negative impact. But right now, the Fed is what's carrying the load in the market. The Fed and other central banks, and so you can't really fight it at this point. In our chat room, Chi also brought up a good point, and I got to talk about it really quick. He said. Everybody's expecting a move to 2930, which is the 618 retracement, the big 618. everybody's kind of expecting that move. So the question is, are we even going to get there? Because when everybody's expecting us to get there, the risk of us not getting there is pretty high. So, the S&P, I don't know how much, we have left in it in this move, but look, we're at 29.11. That's 29.33. It's only 20 S&P points away. We might actually get there. Now, if we start reversing, that's where you have to start looking at the dollar, because if we reverse lower from current levels, let's just say where we're at, or let's say the stock market opens and reverses lower, that's when the dollar is going to gain strength. The dollar tends to gain strength when there's a little, some risk aversion. We haven't seen risk aversion yet, but if there is some, the dollar is going to probably start to show some strength. You look at like currencies like the Aussie squeezing past resistance. This is a point where you're like, okay, well, if I can't beat them, join them type of thing. And the Aussie just continues to make headway, higher. But like I said, if stocks start to show some weakness, it's going to show up in the dollar, and you're going to start to see the dollar gain some strength, in my opinion. So that's something to watch. Um, Also, the dollar Mexican peso. The dollar Mexican peso is an emerging market currency, obviously. That's come off after hitting a 78% retracement, a lower high. And by the way, if you use Forex analytics, what I'm going over right now is stuff that you've been hearing on the analysis. Um, like yesterday, the dollar Mexican peso rejected the 78% retracement, which is significant. If that level can hold, the risk of a lower high may put the 24 level back in play in the coming weeks. If that's the case, the uptrend line is at 24.70 now in focus for the bears. And we broke that yesterday, and now are following through. And will continue to come down as long as stocks stay strong. But if stocks stay strong, then you're going to see this something that looks more like this play out, where you're going to see some support come into play down here around 24, and then you're going to see it rally again. But it's a messy picture in the market right now. I want one other currency pair. I know Amanda in our chat room, she's out shorting the cable at 25.10. If you don't know why she's out there shorting the cable at 25.10, it's a 618 retracement. Like, you can see it right here. This is an hourly chart. Here, let me grab that fib. Okay. I know the way Amanda trades, and she's probably sees this horizontal resistance here, right? 618 retracement, knocking our head up against 618, possible head and shoulder pattern in the future in the event that it continues to work out. So, it's worth being on, from a risk reward standpoint, being on the short side up here, as long as it's holding. Okay, as long as this continues to hold. Obviously, if you break above the highs today, there's some squeezing to do. So, just food for thought in some of these in some of the pairs that we're seeing here. The S&P, I know we talked a little bit about that. What's kind of got me, and Coach, are you there?
Yes.
Okay. I don't know what to do with precious metals here. And that's, gold's been one of those really strange asset classes where, I'm thinking, well, first of all, I'm bullish gold. So, but just because I'm bullish gold overall doesn't mean that I'm bullish at any, at every given point. I understand the fact that we've made lower highs here. We're testing the breakout point around 1700, which I think is key. You could probably argue that we're basically at a trend line, something that looks like this. But it's interesting that gold hasn't pulled back, don't you think?
Yeah, and if you want something else to put in the bullish column, gold shares have been outperforming the bullion, which is constructive for gold. So for many years it was underperforming, and the gold shares actually came back and made a new high post-virus crash. So you could
So
look at
when you're
something
talking
like,
about gold shares, are you talking about miners?
yeah, like GDX. You could pull GDX up here, Blake. You'll see. Keep that in your memory what you're showing in gold, and then now look at this.
Yeah.
Okay, so those are all the seniors, which are the blue chip miners, and they've broken out. So that tempers my bearishness in the gold. And
Blake, when
go
he
ahead.
says breaking out, zoom out more in the chart and you'll see exactly what he means, because there is a huge breakout from multi-year levels.
On what?
Yeah.
On the GDX, where you are, just zoom out to show even more price action. Yeah, go to weekly, for example.
Yeah.
Now you can see that zone. Yeah, exactly.
Yeah.
Exactly.
Yeah, I mean that makes a lot of sense, and it's like why be bearish precious metals when you have now the GDX, which as you pointed out are gold miners as well. That also are they being swept up by the bullishness in equities too?
Yeah, that's part of it.
Yeah,
but I was always taught that in most complexes, oil, metals, that in true bull markets, the shares lead the underlying commodity. So if this was lagging and gold was up here, the inverse would be true. Say gold was up here and GDX was failing, that would have me with a bearish bias, but the opposite is happening.
that makes a lot of sense. Well, gold is one of those assets that I expected that as stocks moved higher, I would have expected gold to move lower, and the fact is that it's not, and that would scare me if I was short, which I have no position here. I'm just I'm no trading position, that put it that way.
I think it's all about yields, Blake. So if I'm right and we get a pop in yields, that could take the gold down. But if I'm wrong and the 10 years going back below 40, what's going to stop gold? There's no competition.
Well, let's talk a little bit about the yields too. I'm surprised yields are down today. I'm surprised yields are down with the stock market doing as well as it is.
Yeah, I'm surprised they haven't made more upward progress during this recovery in the stock market.
Yeah, exactly. So with that being
this
said,
is another proof that the yield curve is now completely controlled by the Fed for the time being.
So what does that tell you, Steve?
Those bastards.
It tells me that they want lower yields irrespective of what's happening in the stock market. And I think that funds and bots that were actually following this relationship to try to, in quotes, arbitrage it or whatever, have been completely unplugged. Because people that were running all those algorithms, they're like, nah, I don't want to bet against yields with the Fed monetizing almost all of the issuance. So just let it be. I mean, it can decouple completely from what risk is doing.
Yeah, that makes sense. Well, thanks
what
for
a
your
nice
input.
compliment. Having Amanda in the chat room is worth the subscription alone. From Chris Scott.
Oh, well, I mean, I agree. Amanda's awesome in the chat room. She's super active. You might ask why she doesn't put in patterns in play. It's just because she's a very active trader in the market. So, and it's great to have her there. Between her and Polly in the chat rooms, they're so active as far as trading goes and chatting. It's nice to know what they're thinking at any given time, and not to mention that we have a lot of pretty savvy traders in that chat room. So, and speaking of which, if you guys haven't tried out Forex Analytics, make sure you do so, and also visit Forest Park FX. They're our webinar sponsor, and matter of fact, they're one of our sponsors for the Trader Summit. Now, as Dale had mentioned, and Steve, just make sure you confirm here. You guys are going to get a separate link for the Trader Summit. So make sure that you guys. What's that?
If they have subscribed, I just want to make the clarification so they don't think that if they're subscribed to Face that means that they automatically get transferred to the Trader Summit
There you
subscription.
go. So what that actually means is you have to register. If you normally listen to the face webinar and you're like, well, I'm going to be here anyway, so I'm going to listen to these guys, because that's partially why we scheduled it during the face webinar, is so that you guys can hear, you're normally here anyway. So the thing is make sure you guys register so you have that link for tomorrow and Thursday. Okay. All right. So just want to make sure that we clarify that. And Steve, you excited for tomorrow?
It sounds funny. We've been working so long to make this happen, and now I'm more or less going to be relieved when it's over, because it's going to bring my my daily schedule back to normal.
Yeah, I know you've been working really hard, and I'm sure everybody afterwards is really going to appreciate all the work you've put into this. It's going to be an awesome event. I'm looking forward to having the opportunity to hear all of these great speakers for the next couple of days. So make sure that you guys get signed up if you haven't gotten signed up. That's the reason you have to do it. Just if you're accustomed to listening to the space webinar every day, you're going to have to get the new link. So make sure you do register. All right. With that being said, I'm gonna pass it over to you guys. Stelios should be here.
No, I'm not. Leave a message after the beep.
Beep, beep.
Good morning, Stelios. How you doing?
I'm very well, thank you. How are you?
Good, good. All right, guys. Well, I want to wish everybody a very happy Tuesday. Yeah, happy Tuesday. And then I'll be here in 4 hours on the daily roundup. So I'll see you in a bit.
Thank you.
See you at the summit tomorrow, Blake.
Yep, we'll see you at the summit, Coach. Thank you.
All right,
Blake is going to have a double role tomorrow at the summit, both as part of Face and Forex Analytics. And for those of you that haven't noticed, he also has a speaker's slot. He's going to be giving us arguments for the dollar, both bullish and bearish.
That's going to be on Thursday.
Yeah, I mean, for the event in general, yes, your presentation is on Thursday, but Face is both days. Perfect. So, what's up, Stel? What's up, Coach?
It's all good here. It's been a pretty quiet day, actually. Equities are the main movers, and oil also. Interestingly, from what I read, the US oil fund, USO, they're actually rolling their June exposure into July and further. So I think this is they can probably see happening what happened with May. So they're one of the main reasons why this front contract is selling off again. Remember, this was trading at over 20 only a few days ago, and it's now 12 or whatever it is. I can't remember, 11. So oil is moving, equities are moving, and equities are, we've been talking about them every day here. I am still not bullish. I still think that we'll see a move lower. Anyway, you see it, the economy has been hampered greatly by this virus. Obviously, there will be a recovery. But the question is, we have a friend here who's saying, oh, I'm hearing that there's going to be huge amounts of hiring afterwards. Yes, there will be. But, honestly, does anybody think we're going to get back to the old activity levels, in any companies that you look at? I don't think so. So hiring is going to be more gradual.
No matter how optimistic somebody is, let's put it in context and make it very simple, Stelio. If you go back to January 8th, right, at the close of the day, that's exactly where we currently are. So
yeah,
if we turn back time roughly 4 months, and we told people that, listen, in 4 months' time, the global economy is going to be more or less in lockdown, 26 million jobs will have been lost in the US alone, right? There is no exact plan for turning back time. Rates are going to be stuck at zero, and we're already going to have more than $6 trillion of quantitative easing announced.
That's a bullish thing. That's the only bullish thing.
Actually. Yeah, but I mean, if you had this complete description and they ask you, okay, so now that you know all that, where would you assume stocks are going to be?
Yeah,
Who would
I would have
say
said 3,000.
here?
I would have said 2,000. Yeah. So yeah, you're absolutely right. And fundamentally, it doesn't make any sense. The problem is that positioning has been bearish or it's short, and it's the pain trade is to be short equities. That's why we're squeezing. And at some point, obviously, fundamentals are going to catch up. I do think we're going to see a drop. I'm not short, but I'm not long either. I put my bids well below. I'm just waiting to see how the price action. But again, it doesn't make sense, and that's why a lot of people are short. And unfortunately, I think a lot of them have to get stopped out first before we actually move lower.
Oh, totally agree with you. I mean, the market is really vicious, and it's really, really devious, having to do with this type of price action. I mean, I didn't want to interrupt before, but we were speaking, Stelio, about the GDX, and I told Blake just have a look at the long-term chart. Now, what we didn't stress out before is, here's the GDX. Before the GDX actually produced this bullish breakout, look what it did. So everybody that was bullish the GDX up there, they took them to the cleaners by producing a lower low. Imagine that.
That was during the crash.
We went below the September 2018 lows, while gold was roughly at the highs against the dollar and at all-time highs against more or less every other currency, right?
It's funny, Steve. I was interviewing Kirk Spano that day. We were crashing and washing down there, and he was talking about it was one of the markets he liked. I said, well, buy it. It's 16. And he did. And
that was
what
a good
great
trade.
What a great trade. Yeah.
An amazing trade, because that was a gift.
I try and help our guests make money too.
So, Stel, what were you saying?
Hold on, I have my daughter here. One second. So yes, that was the main mover is oil and equities. The other interesting thing is even with oil down, what the front contract is down 10% or whatever it is, commodity currencies are doing well, especially the Norwegian krona, which is one I look at, and everybody I think knows that is doing particularly well. And I still am short Euro Norway, and I really, really like being long the Norwegian kroner because look, the main reason why the kroner has been smashed was oil, and oil is now trading at 0 or 10 or 5 or $20, whatever it is. There's a lower bound to that, so I still think this is a great trade, and I'm holding on to that for sure. Otherwise, we had Riksbank today unchanged. They didn't really give us anything. We don't actually analyze the Swedish krona, but it's always nice to see what they're doing. And
here's
really,
the USD SEK, by the way, since you mentioned it.
That is, that's dropping as well. And actually, coming into support now.
Coming into support indeed. I mean, this 980 area roughly is strong support.
Yeah, I personally think these pairs, USD SEK, USD NOK, are going a lot lower unless we do see a sudden and violent, basically, crash in equities, whereby I think we're going to see another dollar squeeze, just like we did a few weeks ago.
In any case, looking around, I don't see many currencies better than the NOK, for example. So it's one of the few times that I would be like, I can be out of the money. I'm fine with that. Anyhow, you're collecting some overnight roll to hold. So, I see no way that if I close my eyes and open them again in a year from now or 2 years from now, NOK is not going to be a lot stronger than the US dollar. So personally, I'm okay with that.
Yeah, and up until about 3 weeks ago, when Norges Bank cut rates as well, I was collecting like 1.4% as well of carry on Euro NOK, so that was nice.
Yeah, which is actually nice.
And I still keep that, of course. But really, what we're waiting for now is the FOMC, which is tomorrow, right? Yes, and jobless claims on Thursday.
ECB this week?
ECB, I think ECB as well. Is it? Is it on Thursday? Let's have a look. Yes,
Speaking of-
ECB is on Thursday. Yes.
Speaking of
Yeah.
which, Stelio, there is some speculation that the Fed might go negative. Personally,
I doubt that.
I
doubt
don't
that.
believe that's going to happen. And, you know, because we have the only economic index that matters, the stock market.
Yeah, I think negative rates, everybody knows now that they really don't work. Even the Swedes, they were negative, they went back to zero.
The fact
I
that they
think-
don't work is still an argument that Fed is going to eventually do it. Because, you know, that's what they do. They
Yeah,
do
yeah, no,
whatever
I think-
doesn't really work and repeat it again and again and again. We've seen that with quantitative easing. If it worked, we would have
Yeah.
only one round.
I think if they want to add more liquidity, they just mint a few more $1 trillion coins and do whatever they need to do. You know, it's.
I think that if they get desperate, they might go negative. But with stocks, for example, in the Nasdaq being back to where they were in January, meaning at the highest valuations ever in history, because we know that earnings expectations have plummeted. I don't think there is any chance they're going to go negative. So anybody that's actually still expecting in the market that they're going to go negative now, I don't think it's happening. Do I think they will be forced eventually to do it? Yeah, absolutely. I agree with what Stelio said. We know that it's not working, but that never stopped them from doing stupid shit. So yeah. They're going to do it.
A friend is asking, will US consumer confidence have a significant impact today? It used to be important, but really we're expecting a big drop from 120 to like 88 or whatever. If it comes at 80, if it comes at 90, if it comes at 95, it's the same thing. So really, I don't think that's going to move markets at all. So my answer is no.
Yeah, I agree.
Yeah. So otherwise, it's been a pretty quiet day actually. I'm just a bit baffled with equities, but I do think that, as I said before, we need to get a few stops, and then with earnings season starting now, we have some big names releasing this week. I think we might see some pretty bad surprises. So let's see what happens.
And let's see if the market is actually going to care, or it's the usual bullish attitude, which is everybody's trying to dismiss bad news as already priced in, and lean on good news. You know what I mean?
Yeah, but we're now getting to a point where bad news is proper bad news, meaning companies are going to start having problems. I don't want to say surviving, but with liquidity and dividends and everything. So I think it's becoming real now. If earnings come out really bad, then I think it's going to be more. I think it's going to move the needle. Let me put it that way.
I think that at some point we're going to have a day of reckoning, and when that day is going to be, when the market realizes that problems have become so severe that there is no amount of liquidity that will be able to solve them. Let's see when that happens. Now, in your short-term assessment, I think that stocks, even if we've seen the low, I think that stocks are extremely overdone in this rebound, especially the Nasdaq. I mean, it's in comparison to what expectations were when we were back here 4 months ago and where we are now and what is the real situation. I mean, this is just silly. So I do think that the risk reward has clearly shifted now in at least looking for a decent pullback. So for example, in the case of the Nasdaq, I think that a move lower towards 8,000, something like this, is very likely before we move higher. And that is assuming the best case scenario, which is that we've already seen the low. Because I know that the rebound is, extremely strong. But in my opinion, there is no guarantee you've seen the low yet. The only guarantee is that current prices make no sense. We should at least have some type of a pullback, right? So yeah, the market is definitely doing a great job in squeezing people that were short, but at some point it's going to have to do the opposite. I mean, squeeze people that bought late into this rebound. Now, the IWM, since Kirk mentioned it before. He says, love your deal. I'm in 4 trading rooms. All the swing traders are talking about taking profits and scaling into shorts on IWM and spiders. I think that the IWM has been the most honest index here. So I agree with what Kirk says. I think that the fact that the IWM was the only index that didn't post a higher high following the summer 2018 peak was a nice divergence that was telling, and we kept stressing that out. And I also think it's not by accident that the recovery in the IWM is by far the weakest of all. So I still follow this rebound channel, and I think that any move towards 133, very nice confluence of resistances, is probably going to be a nice rejection area. And I do think that when we see a pullback in the rest of the indices, I wouldn't be surprised if IWM is going to be the first one that's going to produce lower lows. Perhaps we will even see a divergence in which the IWM is going to produce a lower low while other indices do not. That's also going to be probably an interesting signal. Now, the DAX, before I go to FX, the DAX, we had spoken about this rectangle. We had also, shown it on the 4-hour chart. So, we had a nice rectangle playing out here. Initially, I said, looks like we might get rejected and move lower because I was viewing this initially as a ascending wedge. Then it was clear it became a rectangle and price action was more or less corrective. So, as I said, playing the rectangle was either buying breakout to the upside or a breakdown to the downside. The breakout to the upside, if confirmed today, because keep in mind that we're just poking our head above it, but there's no guarantee we're going to close above it, right? If that's the case, though, that opens the door for another move higher to 11,500. I think there's going to be a very good chance that if that happens, so if this happens, I think that the move to 11,500 is going to be terminal, and at least a very decent correction should follow before we see higher prices. Now, of course, there is also the chance that we don't manage to close above it today, in which case we remain trapped in this rectangle. Okay, so I'm quite curious to see what's going to happen here in the DAX. Quite a clean technical formation, and that's why I'm following it closely. Let's see if we're going to see a divergence. I mean, we are seeing the main US indices, pushing new rebound highs. If the DAX fails to do so today, might also show, that the rest of the indices are about to fail. Now, let me go through some questions. Spain, IBEX, GDX. GDX we already covered. The GDX is in breakout territory. There's no question about it. Big breakout in the GDX. Oh, sorry, this is a 4-hour chart. Here it is. So big breakout in the GDX. You can see it clearly here, right? Big breakout in the GDX. This looks like a big rounded bottom, as we say. So let me make it very clear. There you go. You see? And I really don't see any significant resistance until we more or less reach 40. Somewhere there. So as long as we trade above, let's say 31, I think that the path of least resistance is clearly higher here. Okay. You can see it yourself. I mean, 31, key support area. Okay, so being bullish against 31 makes all the sense in the world from, any way you look at it. Do you think the USO, given a bad track record with a restructuring of stock 81, will become a good investment for oil recovery as an ETF? Antonia, we've talked about it in the past. I think the best play at the moment, and let me have a look here. Since Kirk is on the webinar, is he a guest also today? No, he isn't. Okay, so Kirk would be the best to answer that question. But in my humble opinion, best play out there remains buying some of the stock, some of the companies that have, a decent balance sheet and have been out there for decades and decades. So I think the best and safest play to express bullishness in crude is buying some, 2, 3 of those stocks like Shell, BP, ExxonMobil, a couple more. Not, I mean, very selectively, of course, because some of them are like trash. But some of them I think are going to do very well when crude recovers. Okay. Now I wouldn't be leaning on the dividend because most of them I'm assuming will have to cut it or trim it or whatever. But in any case, I think they'll do well once crude oil recovers. Speaking of crude oil, the continuous still looks very bearish, but look at the ongoing divergence in natural gas. Right. So this is something I'm still paying attention to. I mean, natural gas couldn't care less. Actually, natural gas above 205, I think is going to be in breakout territory. So, that's going to be, in my opinion, another signal that is going to be pointing that, crude oil weakness is very temporary, at least in these levels. I mean, this type of weakness that we've been seeing during the past several weeks. So yeah, natural gas, because we had a question about it, watch carefully 205. I think quite a key resistance area. You can see it acted as support there, resistance, and might act as resistance once again here. But if it doesn't, if we slice through it, I think that's going to be a bullish development. Now I have to admit that so far the rebound, doesn't seem impressive in any kind of way, doesn't seem impulsive, but only the fact that we're strongly divergent with crude, is enough for me to pay close attention to it. And sometimes, a move starts very, um, um, very silently. Let's say starts very conservatively, and it accelerates, later on. So don't rule out an explosion higher in this, especially if crude really turns to the upside. And crude is a market that is also very sentiment based. I mean, you get some rumors coming out about OPEC wanting to do a lot more in a short period of time, and you can see a completely reversal in sentiment, and a big rebound in crude oil. Obviously, in that case, natural gas could really accelerate to the upside. How is Aussie USD looking? Is it a good short? Listen, if you remember at the beginning of last week, I thought that Aussie, once it produced that rebound the week before, would accelerate lower. But then, that was at the beginning of last week, sorry. But then, a few more days passed. And if you remember, I came out on this webinar and said that, something, both risk assets and some of the commodity currencies are showing me that what looked initially like a reversal lower was just the beginning of a period of consolidation. And I remember specifically that we had pointed out to the 4-hour chart in the Aussie and the Kiwi, and I showed this. Here's the Aussie, and here's the Kiwi. Okay, so I said that what initially looked to me like a nice reversal lower, now it seems to me like a consolidation. And what do you expect a consolidation to do? The answer is break in the direction of the prior trend. So the short-term trend was higher, and this was clearly a consolidation. I mean, slow overlapping price action, breakout, And there we go, new highs. So I expected that this is going to happen by roughly the middle of last week. It's now manifesting. So the question is, okay, now what? I mean, is it going to be pushing a lot higher than here? The answer is, as I said before, I expect that this rebound in risk assets is going to at least take a turn lower, even if temporarily, in the days, worst case scenario, couple of weeks ahead. So I think that this makes it quite a dangerous proposition trying to chase the Aussie and the Kiwi higher, because I have little doubt that once a risk turns lower, even if that is for a period of time, the Aussie and the Kiwi are going to be pulling back. So the question is, how much are they going to be pulling back, and if they're going to prove that this move higher was, the beginning of a bigger turn to the upside. We're going to have to find out. And how do you find out in this case? By observing price action and judging if the price action you're seeing is impulsive or corrective. So when this happens, it's going to be a totally different thing to see something like this happening, or seeing something like this happening, right? Because in the latter case, seeing some type of a correction that is very orderly, that is, looking like it's, corrective price action and not impulsive, is actually going to make me interested in buying that type of a pullback. Now, seeing a very sharp move to the downside, and characteristics that are more of an impulse, is going to make me want to sell rallies again. So, since it's still a big question mark in my mind, if we've seen the lows for the time being in risk assets or not, I have the exact same question mark having to do with FX and commodity currencies, right? So for me, that's going to be very important. And saying I don't know, as long as you have a plan to figure out what the case is very healthy, right? I mean, I could easily play smart here and tell you, oh, I'm sure it's going to be that or whatever. But, I really don't know. Has the Fed done enough to support risk assets despite the overall huge damage to the economy? Because as an economist, I have no doubt that the damage to the economy is clearly not depicted in stock prices anymore at all, right? I mean, they're completely decoupled from economic reality. But, I'm not going to trade based on that, because I don't want to be right and lose money. I'd rather be wrong and make money, because, my main function here is as a trader, right? So, I want to see what type of a pullback we're going to get in stocks, in commodity currencies, etc. So once I see the type of price action we get on the way down, then I'm going to feel a lot more confident saying, okay, as it seems, for example, we've seen the lows, so I need to be buying. Or, as it seems, we hadn't seen the lows and this was a vicious bear market rally, in which case I want to be selling any type of a, rebound we get on the way down. So, that's my plan. I mean, sometimes you have to watch more and do less than do more and, not pay attention to what's happening. DJI, listen, Dow Jones, nothing really you can see in Dow Jones that you haven't seen in the S&P. So here it is. Oh, yeah, that's why it has no charting. There it is. So here it is, clearly weaker than the Nasdaq. The Nasdaq is the strongest, somewhat weaker than the S&P. I mean, we haven't retraced yet 61.8. S&P almost has retraced 61.8. But, quite similar to the S&P. So, same deal here. Once all those fail, Dow Jones is going to fail as well. Obviously, if you want to go with sorting the weakest, your first choice should be the IWM, the Russell. And then S&P and the Dow Jones, and last the Nasdaq, right? The hype in the Nasdaq is still there. We can clearly see that. So yeah, I mean, it is what it is. So, I do think that the Dow Jones is also going to produce more weakness. Now the question is what kind of weakness? I just addressed that a couple of minutes earlier. We'll have to wait and see. Is it going to be something like that? Or is it going to be something like that, right? In any case, I think this is an interesting area, 21,700, quite an interesting area. First area of support is going to be 22,600. I can tell you that much, and we take it from there. So far, I have to say one more thing. So far, the rebound in momentum indicators, especially in the S&P and the Dow Jones, doesn't look that impulsive, I have to tell you. So, I mean, that also tells me that we're probably about to fail sooner rather than later. Dale, which interview were you talking about regarding GDX? The interview with Kirk Spano, Neil. You can find it on YouTube. Kirk is saying that TOT is the only one he's buying. Okay, thank you. Means a lot coming from you. Have you ever seen equities ignore fundamentals to this degree? No, not to this degree, but it doesn't mean much, Chris, because I'm going to tell you, as a general observation, I'm going to tell you the opposite. On average, every year that passes, since 20 years ago, but in increasing magnitude, I see stock markets decouple even more and more from fundamentals. So clearly there's been an acceleration to that, since Fed threw everything, including the kitchen, to monetary policy like a couple of months ago. So yeah, I mean, it's worse than it has ever been, but it is in general a trend that has been ongoing for quite some time. Hey, Steve, could you cover USD CAD if you have not already? Thanks. Yeah, absolutely. We haven't, and we actually didn't even cover it yesterday. So it's a good opportunity to speak about USD
Blake
CAD.
did, and that was the chart of the day.
Oh, okay, perfect. So here is USD CAD and USD NOK. So,
and Kirk Spano is the man.
Oh, he is. I mean, he's one of the guys that really knows what he's talking about. There's no question
And we got
about
pros that come into face to hang out with us. Isn't that a nice compliment?
It is a nice compliment. And speaking of which, we should definitely have Kirk in the next event that we do, Coach.
All right, Kirk, that'll cost you.
He's going to cost him time. Other than that, nothing.
He knows how mercenary I am. He knows me. All right.
So my initial assumption with USD CAD was that it had already broken out. There is an alternative scenario that it hasn't broken out yet, right? There is also the third case scenario that was a blow off top. I still think that the latter scenario is a lower probability scenario. So bottom line, as long as we're trading above 138, I would be very, very careful being short the USD CAD. Okay, as long as we're above 138. So against 138, I think, it's probably a bad proposition. Now, having to do with USD NOK, if you remember, I said that I seriously doubt that this move higher would be anything else but a correction. We drew that quite some time ago, and that seems to be the case. I'm still short USD NOK. I'm still short Euro NOK, and as I've said, these are long-term positions for me, and I'm going to be holding them. So, USD NOK tells me that there is a much, much higher chance, for example, versus what we see in USD CAD, that USD NOK has already found a high. USD CAD gives me a lot less to believe that that's the case, right? But USD NOK, I think there's a big chance we've seen a blow off top. Keep in mind that, in my opinion, comparing the two economies, the Norwegian and the Canadian, is a big mistake. The Norwegian economy is much, much healthier economy. Okay. Norway, oppositely from what Canada did not follow the US example in fiscal irresponsibility, and most importantly, in the case of Canada, monetary madness. Canadian monetary policy was too loose for too long, and the result was the build-up of several bubbles, which definitely damaged the economy. Now, I still believe that the Canadian economy is healthier than the US economy. So eventually, I think that the Canadian dollar is going to be a great buying opportunity against the US dollar, but we're not there yet. I've been making a killing long on the Aussie since the crash. That is good for you. Would you consider ASX to lead the indices? Absolutely not is the answer. And I'm going to show you why. Because this is the Australian index, right? If we take, instead of it, if we take this one, you'll see that, doesn't look that good. So no, I wouldn't be so much of a believer in ASX. Oh, sorry, that's not it. You're talking about this one, right? So we're clear. Which ASX are you talking about? So when we don't have a misunderstanding. So answer that and I'll tell you. Price discovery is very difficult with the Fed, says Kirk. When we find it, it happens suddenly. I totally agree. A few folks asked about futures trading for oil, so I sent them your way. I hope they show up. Thank you, Kirk. Thank you. Makes sense. Thank you for answering, says Chris. Yeah, just Google him, Neil. Hi, Steve. Could you please have a look at Euroswiss? Yeah, I actually mentioned Euroswiss yesterday. And having to do with Euroswiss, I said yesterday very clearly that I found yesterday's rebound quite interesting in the Euro Swiss, but I'm still paying attention to this descending channel. Okay, so bottom line, for me to start looking, seriously higher here, I want to see a breakout from, let's say, 106, 1065. So it's showing some signs of life so far. I mean, today and yesterday. But I want to see a little bit of a continuation. And then I think that, might look like a decent opportunity to be long. Keep in mind, I'm the last person that would advocate for using high leverage, but there's no question about it. Euroswiss is a slow mover. So obviously, if you want to see, some P&L here, you have to adjust your position accordingly to its ATR, to its average through range. Okay, so keep that in mind. So if you want to, trade the Euro Swiss to the upside and you use a regular position size, I mean, if you are in the right side of the market, you might need to wait a long time to actually, make it count. So, you might want to take that into consideration when, adjusting position size. Question about what's the best okay, we answered that. So I'll cover these three and we're done for the day. Question about Euro Aussie, we covered that yesterday, but we'll revisit it. Here is Euro Aussie approaching next area of support at 166.20. Now pay attention to this and pay attention to this descending channel. I think that a good sign that this might be reversing higher would be breaking out from this channel. So until that happens, you should be careful being to the upside. But I think that once that happens, and probably it's going to coincide with risk assets turning lower, you're going to see a very decent rebound. And a decent rebound in that case might easily mean 500 pips to the upside. Okay, that's what I said yesterday, and nothing has changed. That's why I'm repeating it today. And then the question we had about USD, INR, and the Nifty. So USD INR, initially I said looked good for another push to the upside before lower, testing support as we speak. So who knows? It might break now and never produce a higher high. But I'm still watching this formation. So, watch this formation closely to decide what's going to happen next. We're currently testing support, if that means anything. So, from a risk reward perspective in the short term might be a good buying opportunity. Now, having to do with the Nifty, I said it some time ago. Okay, not here actually. There. I said it some time ago and still stands. I think that the rebound in the Nifty looks corrective to me. You can still see it here. Retesting 38.2, very weak rebound. I mean, compare this to what the Nasdaq has done, absolutely no comparison. So I really believe that we might fail from here, or we might fail from a little bit higher, for example, that horizontal support resistance area. But Nifty doesn't look healthy to me. It looks to me like it will continue lower sooner rather than later. So I think it's not a good place to be buying the Nifty. Probably it's a decent area to start selling the Nifty for at least one more leg to the downside. So everybody, we're going to see you tomorrow on the Traders Summit because FACE is going to be broadcasted there. So Dale,
Yes, my man.
how
Don't
was the
just
new
count your.
computer? Everything okay
Okay,
today?
I want to talk to you. Well, I'm working with a little less real estate because I have a slave I usually work with, two monitors,
That's okay. We can
and
connect them
my
to the new computer.
the prong. Well, I'll talk to you about it afterwards. Is an old one with the teeth, and I need a different cord for my monitor to work on the new one. So I tried. Basically, did it on one screen today. So
Okay,
I'm very proud of
we'll get you
myself.
a new cord. It's no big deal. You know what
Yeah,
I mean?
okay. Anyway, but guys, it's a new era for me. I gave up my 20-year-old PC, and wow, in a year I got a new car and a new computer. So don't just count your pips, count your blessings, and really looking forward to tomorrow, Steve.
Same here. It's going
The
to be great.
best collection of speakers over a 2-day period I've ever hosted. So really, it's I think going to be a very great event to edify people that come and listen. And what an opportunity! I mean, how many times do you get to ask Mark Yusko or Mark Chandler or Mark
Peter Schiff,
Newton?
Peter Goodburn,
Yeah, Peter's going to be here. I'm telling
Peter
you,
Bookvard.
Blake Morrow. How often do you get to ask Blake Morrow a question?
Yeah, especially
Yeah,
Blake. I don't know. I mean,
yeah.
he's very hard
So
to reach.
yeah, he's so closed and secretive. So
Yeah.
really looking forward to you guys being with us tomorrow and the following day for I think the best online event that I've ever been a part of. So
And more than 3,000 are going to be there with you.
okay,
So
great.
We're
Yeah.
very thankful to everybody that's registered. I think they will get their time's worth because they didn't pay anything, but they're definitely going to get their time's worth.
And someone people are asking, Steve, will the videos for the summit be available? And I would say that register even if you can't make it, because then at least you're on the list to possibly. Will we be able to send out recordings to
Yes.
people, or we're just going to post it?
Yes, we will.
Okay.
We will send.
Yeah, it starts the same time.
There is going to be
tomorrow.
the same version of the site that we're using.
Yeah.
The site is going to change during the event, so there is a pre-event version, the one that you can see and you will be able to see until tomorrow. The during event version of the site, which is a little bit different because it focuses more on who's speaking at that moment in time and who's speaking next, etc. And then there is the post version of the site, where you will also be able to find the recordings for the event. So even if you can't watch live, your favorite speaker go through the presentation, be asked questions, etc. There's still benefit for you to go and register.
Okay. So we'll see everyone tomorrow. Get your questions ready, because you're
Yeah.
part of it. Okay. So
Indeed.
you're interactive on this summit. So Steve, have a great day.
You
Get
do,
some
coach.
rest tonight, and we'll see
No
you.
chance, as you understand, a lot of little details, etc. But it's going to be worth it. It's okay. I'm not complaining.
Okay. And Joseph Wheel, if you think this is something, I'm going to have Steve, before I show it, before I close the meeting, show the website. You're welcome, Alexandros. This was Joseph's first time here in Face, and something you may want to consider for a trial, a $1 trial. Maybe Steve could post a link. If you find this informative, it's only the tip of the iceberg of what we do here, because after Face ends, everyone's in the chat room collaborating and sharing trading ideas. And that's a wrap. So everyone have a great day, good hunting, and we'll see you at the summit tomorrow. Adios.
Thank you, Dale. Thank you, everybody.
Thank you,
See you
Steve.
tomorrow.
See you, everyone.